Welcome to the Fiera Real Estate UK Long Income webinar. I'm Rupert Sheldon, Manager of the Fiera Real Estate UK Long Income Fund, and I'd like to share with you some key observations on this increasingly important segment of the market here in the UK. So firstly, what do we mean by the term long income in UK commercial real estate? Well, long income is considered to be anything over 15 years in duration. With 94% of UK commercial leases at less than 15 years, this is very much the exception rather than the norm. By point of reference, our Fiera Real Estate Long Income Fund, also known as FRELIF, currently has a minimum weighted average unexpired lease term of 16.2 years, which places it very much in the long income space. So why buy longer leased commercial real estate? Well, in recent years, the case has become compelling. With long income index-linked real estate offering a good match as a bond proxy, the key attributes include a lower level of asset depreciation per annum when spread over a longer lease term, and lower cost of repair and maintenance, which rests with the tenant on triple net leases rather than the landlord. These factors combine with lower vacancy rates, meaning less dilution to returns from capital expenditure and cost leakage. All of this adds up to stable total returns when measured against the wider market, disproportionately attractive income returns, and a resultant higher relative Sharpe ratio, a universally accepted measure of risk versus return. So having built the case for investment, what are the key challenges to execution? Well, the principal one has to be access to stock. As we've seen, only 5% of the market today represents qualifying stock due to changing occupier requirements for shorter leases. Managers therefore need to find a way of cracking this code to open up deal flow. At Fiera Real Estate, the solution is to source and execute through our unique platform of 10 regional operating development partners, all of whom are active developers of long income real estate, future-proofed in the key areas of technology, sustainability and ESG, therefore reducing occupational and functional obsolescence. A second challenge is underwriting tenant counterparty risk over the longer term. This is where robust systems and processes come in at Fiera, ensuring a consistently high occupancy rate and low default rate across FRELIF. This process is supplemented by an investment strategy focused on high-grade modern buildings and strong underlying residual site values. Thought it would be a good opportunity to give an example of these key attributes in a recent acquisition for FRELIF in Q1 this year. This was an off-market sale and leaseback transaction in Birmingham, the UK's second city. The property occupies a prime site in the resilient and favoured logistics sector and benefits from long duration income, low tenant counterparty risk and inflation-linked 5-yearly rent reviews, making the asset a perfect liability match. The minimum income commitment over the life of the lease is 200% of day one investment value, and the cleared site value alone stands at 65% of purchase price. These are really solid fundamentals which underpin a strong average income return and IRR for what is essentially a low-risk project. So, summary conclusions. We've seen that long income investing has outperformed through the cycle on a risk-adjusted basis. So moving forward, what are the key takeaways? Well, rental indexation, which is commonplace in long income investing, should align well in a post-COVID world where inflation must surely follow. For us, 78% of FRELIF is currently hedged should this happen. Secondly, rigorous ongoing credit assessment will be key to maintaining low default rates and strong rent collection through the cycle. Acquiring new developments which are future-proofed for both technology and ESG will minimise obsolescence and protect capital values. And keep an eye out for strong residual site values, as these should continue to underpin asset acquisitions. But overall, the key will always remain gaining access to best-in-class stock as the investable universe continues to shrink over time. Fiera's secret sauce of securing consistent deal flow from its 10 part-owned regional development partners continues to provide that clear USP. So finally, following the fund opening up to third-party investment in March this year, there is unit availability and a strong investment case as we move through the current cycle. We would love to talk to you about investment on behalf of any of your clients.